Beyond Meat was once the darling of the stock market. It promised a revolution, a future where plant-based protein would take over the world. Its stock soared to nearly $200 a share. But today, the story is very different. Its stock trades for just a few dollars, and every earnings report feels like a new headline of disappointment. So, what happened? Is this company a visionary leader going through a rough patch? Or is it a failed experiment on the brink of collapse? Today, on Debated Stocks, we are diving deep into the ultimate battle, the bull case versus the bear case for Beyond Meat. We'll look at the undeniable facts that have investors running for the hills. But then we'll explore the bold new strategy that just might save the company. Let's start with the bear case, and it's brutal. The argument here is simple. Beyond Meat is not just struggling. It's a fundamentally flawed business model. First, the financials. The numbers don't lie. In its Q2 2025 earnings report, the company announced a near 20% year-over-year drop in revenue. That's not a small setback, that's a major sign of a failing business. For a company that was supposed to be a high-growth leader, this is a death knell. They also projected Q3 2025 revenues to be even lower, between $68 million and $73 million. A grim outlook that shows no immediate rebound is in sight. And it's not just a revenue problem, it's a profitability crisis. The company continues to post massive net losses quarter after quarter. In Q2 2025 alone, their net loss was over $29 million. They are bleeding cash, and their balance sheet is weighed down by over $1.2 billion in debt. Second, the competitive landscape has changed entirely. When Beyond Meat first launched, it was one of the only games in town. Now, they're being attacked from all sides. On one hand, you have well-funded private competitors like Impossible Foods, which has secured over $2 billion in funding and is gaining market share. On the other, you have traditional food giants like Tyson and Nestlé, launching their own plant-based lines, using their established supply chains and massive marketing budgets to undercut Beyond Meat. Even major grocery chains are creating their own private label products, offering a cheaper alternative. Finally, the market itself is in question. The plant-based plateau is real. The initial hype has faded, and consumers are pushing back on taste, price, and the heavy processing of some of these products. It's becoming increasingly clear that the mainstream consumer is not ready to fully switch. From animal protein and beyond, meat is losing its prime position on the shelf. Now, let's flip the script. The bulls believe the bears are a year behind the story. They argue that this isn't a company in a death spiral. It's a company in the middle of a painful but necessary transformation. First, the strategic pivot. CEO Ethan Brown has openly admitted that the old growth at all costs model was not sustainable. The company has now shifted to a strategy of sustainable profitability. They've aggressively cut costs, laid off employees, and shut down non-profitable international ventures, like their operations in China. These are not signs of a failing business, but a business getting lean and efficient to survive for the long term. This is exactly what the company needs to do, to start inching toward profitability. Second, innovation is still at the core of the business. While the market has been weak, Beyond Meat's new products have been successful. Their Beyond Chicken Pieces and Beyond Steak, for example, have received strong reviews and are seeing good traction, especially in the food service sector. The company is learning from its mistakes and is refining its products to better match consumer expectations for taste and texture. Finally, the long-term trend is still intact. While the U.S. market has hit a snag, the global market for plant-based proteins is projected to grow at a massive 20% compound annual growth rate through 2031. This is not a zero-sum game. There is still a multi-billion-dollar opportunity to be had, especially in international markets where Beyond Meat still holds a strong brand presence. The bulls believe the company is making the hard choices now to position itself, to capture that growth when the market eventually recovers. So where does that leave us? This is not a simple buy or sell decision. Beyond Meat is a textbook case of a high-risk, high-reward investment. The bear case is grounded in today's painful reality. The revenue is declining and losses are mounting. These are not things you can ignore, but the bull case is about tomorrow's potential. A leaner, more efficient company that is a first mover in a still-growing global market. The question you have to ask yourself is, can Beyond Meat survive long enough to capitalize on that growth? The company's recent cost-cutting and strategic shifts show they are fighting to do just that. Beyond Meat is not for the faint of heart. It is a stock for true believers who can stomach the volatility and have a long-term horizon. The next few quarters will be critical to see if their turnaround strategy is working. But what do you think? Are you a bull or a bear on Beyond Meat? Let me know in the comments below. If you found this analysis helpful, please hit the like button and be sure to subscribe to Debated Stocks for more deep dives into the most controversial companies on the market. Thanks for watching.